Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you are watching Indian Open. Very good morning, Neeraj.
Good morning, Neeraj, and a very good morning to all of our viewers. This morning, these are our headlines. Crude prices come off a 3-year high ahead of Donald Trump's decision on the Iran deal. He tweets that the decision will be announced later tonight. The Indian currency breached the 67 to $1 mark for the first time in more than 2 years. Brokerages maintain their positions on ICICI Bank after the private sector lender manages to contain gross NPA figures below 10% in the fourth quarter. A 5-judge constitution bench will hear Congress plea challenging the Vice President's decision to reject the impeachment motion filed against the Chief Justice of India.
Well, yeah, the rupee dipping below 60 cents was an incredible thing yesterday. We'll talk to you about it at length, but let's just set up the trade setup for the day. Remember, the US market shut shop on a positive note. Let me just qualify it that way. Let me not really comment on what the nature of the rally was, but they ended in a positive vein, and the Asian markets have taken some leaf out of that. Though I must admit that the last few days, if anything, the SGX Nifty's failed to be the lead indicator. It's been giving contrasting signals and levels for most days in the last few days, so don't quite know if this will hold true. But looking at the Asian picture, it seems like we'll start off on a positive note. But keep in mind, Indian markets had a trend day yesterday. We started off lower and we ended up at the day's highs, almost 1% higher. And there's a fair bit of traction that came in the markets despite the fact that the volumes weren't the best. Banks performed in a meaningful way. PSU banks also saw some life in trade yesterday, which is why the Nifty Bank, the Nifty PSU banks, all of these ended up fairly strongly. And just look at the positioning as well. For all series, while the Nifty OI is not had too much of a positive build-up, the Nifty Bank added 14% to open interest in trade yesterday. So this was remarkable, the kind of positioning. And all through the trading day yesterday, almost every analyst, when asked whether he would trade the Nifty or the Nifty Bank, mentioned that he liked the Nifty Bank trade and the setup more, and were trading Nifty Bank right from the start of the trading day till the end of the trading day. The trades, if they were on the index, were on the Nifty Bank. Just showed the kind of momentum that the Nifty Bank was showing on the charts and on the derivative side as well. The markets for now seem to be brushing aside the concerns of a weaker rupee, higher oil prices, the impending Iran decision as well, as our headline stated. Maybe this is for now, and this could very well change come tomorrow. But for now, it seems to be a trending market which is doing very, very well. And just look at the kind of long and the short build-up yesterday. Ahead of numbers, Jubilant Foodworks saw some dramatic build-up. Exide Industries, Sports' numbers added quite a bit of OI, and a large portion of this open interest build-up in Exide at least happened. And Amara Raja too, as a result of the Exide numbers, happened post-Exide numbers coming in, which was the last half an hour of trade. So quite a bit of activity and brisk activity out there. Tire companies had some build-up. Apollo Tire is a case in point. And on the flip side, I mean, Wockhardt Pharma, Ujjivan, stocks with slightly patchy news or numbers saw a fair bit of short build-up as well. So very, very stock-specific action being carried out. But the Nifty Bank is something that I think everybody is watching out for. And on cue, among stocks to watch, ICICI Bank and Nifty Bank therefore, but ICICI Bank would be key to watch out for. I don't want to talk too much really about this. We'll talk about it on First Word. But brokerage's reaction, by and large, has been mixed. One or two people have cut prices, but we'll talk about that a bit later on. But remember, it's had about a 3% rally. On close, it was a 3% rally. Post close, about 2.5% uptick for ICICI Bank ahead of the numbers. Difficult to see that stock reenacting such a move in trade today post the numbers. So let's wait and watch what happens to that one. PNB Housing Finance, Bloomberg has put out this news that Quality Investment Holdings, which is the Carlyle Group, is looking to sell 8 million equity shares, which is about 4.8% stake, for at least 1280 rupees per share, which is a 9% discount. The market would want to price in that this could be the price at which the deal would be done. Remember, we've seen what's happened with previous such large stake sales that used to happen. In MGL, there was a lot of factoring in, and then the stock opened lower. And then drifted lower post the deal being done as well. I'm not saying the same will happen, but you would expect some bit of a pressure on PNB Housing Finance in the session today. PC Jewelers Yes, it's had 2 very strong days, but it was in the F&O band then. It comes out of the F&O band today, so it'll be very, very interesting to see, or it's come out of the F&O band today. It'll be very, very interesting to see whether traders take some short positions immediately on open on PC Jewellers or not. It's an active stock, all right. I don't need to dwell too much more on this, but just keep in mind, if you're a bull, it's come out of the F&O band. And could see some short positions as well. And Deccan Gold Mines, one that the promoter has sold, it's a measly amount, but they have sold consistently. But there's a court hearing today for Deccan Gold Mines on their Hatti Gold Mines. Pre-pronouncement is what the company said in the exchange filings yesterday. So that could well keep the stock excited in the session today, depending on what the verdict turns out. So at 10:30, 10:45 a.m., watch out. Some verdict and some legal moves could impact the stock price of Deccan Gold Mines as well. Been very active the last few days. So a few stocks to watch out for, Ira.
All right, here's what's coming up on First Word. Important issues to focus on today. The currency, give you a sense of what's really playing into the weaker rupee. That's coming up. We'll talk about ICICI Bank, managed to meet estimates in the fourth quarter, but that's partly due to a tax rise back and also the money that they garnered from stake sale in ICICI Securities. Power sector lenders are coming up with Plan B to try and resolve the stressed assets. Vishwanath Nair gives us the details of that plan and why Jamie Dimon thinks that US and China can arrive at a mutually agreeable deal on trade. Those are some of the issues we are focused on here on First Word. I'll kick it off with the currency. The rupee has been a talking point for the last week, 10 days, perhaps a little bit more than that. It's been weakening and the weakness has persisted. So yesterday we saw the rupee take out 67. There's no magic to that 67 number, just as there's no magic to 66 or 68 or 69. But nevertheless, the fact that we have seen persistent weakness is worth noting. So yesterday, of course, you closed at about 67.17 or so on the Indian rupee. This is on the back of a number of factors, including, of course, oil, as is obvious, the stronger dollar, as is obvious. But, it's important to see how the rupee is doing vis-a-vis other currencies, or rather, in relation to what other currencies have done against the US dollar. So if you look across Asia, you will see that, yes, the rupee is one of the weakest currencies. Year to date, the rupee is, perhaps seen the worst performance, but it's not very far away from comparable currencies like the Philippine peso or the Indonesian rupiah. Those are the three that tend to be spoken in one vein when you talk about Asian emerging market currencies. So we are more or less on track. Remember, last year we had an appreciating year, so a little bit of the additional underperformance that you're seeing on the rupee is perhaps just a catch-up on account of what we did last year and how the environment has changed this year. More important to take a look at what other emerging economy currencies are doing. Not to say that the Indian economy is comparable to economies like Argentina or the Turkish lira, but just to make the point that this is not an India-specific play. There are some aspects to it, like the current account deficit, which are India-specific, but the broader story is that global investors don't want to take large bets on emerging market currencies anymore, and in particular on emerging market bonds, because that is where you have seen the outflows come in. And even in India, if you look at the FI table, it's the bond side which has seen heavier selling. Not surprising, that seems to be where you generally tend to take a hit when the global environment turns. But as a result of the selling on the bond side, we are now negative year to date of about 8,876 crore. Now you saw, I think those numbers are all actually turned around because you saw April selling, you saw March selling, and you have seen May selling. Get that graphic off the screen. I believe it's not accurate. So anyway, you've seen some heavy selling on the bond side, and that's reflecting. I think the only point to make here is that the weakness on the capital account via portfolio flows is coming in at a time when there is expansion of the current account deficit as well. So the balance of payments position is weakening, and that, at the end of the day, is the biggest thing that matters to the currency. A weakening BOP. We hear that the government and the Reserve Bank of India have been having meetings. Well, there's precious little you can do if the BOP is position is changing. It's changing. Finally, just want to make the point as to where the rupee goes from here. I think Bloomberg News has put out a number of articles saying that what were bullish calls at the start of the year have turned into bearish calls now. But if you look at the NDF market, the NDF market has more or less moved along with the spot. Those are the 1-month NDF, 3-month NDF, and 12-month NDF quotes that you can see on your screen. So while they're reflecting, the 12-month NDF is about 70. That's not a level per se that you would expect the rupee to go to immediately. It's just showing you that the markets domestically and offshore are more or less moving in the same direction. We haven't seen a widening of the spread between spot and NDF, which tends to get a little bit of worrying and suggests some amount of speculation building up. So what is happening right now is happening on account of global factors and of course some domestic factors as well, Neeraj.
Okay, so a couple of questions, Ira. Firstly, I remember the last time that we spoke about the bond yields and a couple of measures. I remember you using the term band-aid measures that the RBI is taking and not necessarily having an impact which lasts for longer. Would the domestic factors that are at play ensure that the band-aid factors or band-aid measures, as important as they are, will not necessarily lead to lasting impact?
Yeah, so I think, there is a difference between the measures that had been taken in the past and what was announced on Friday, which was the OMO, because that is actual demand.
Right.
The only question there is it a one-time OMO or do they, continue to, announce these OMOs periodically, whether it's fortnightly or monthly, depending on what they feel the need is. So I think economists are the view that if they have started them, they will continue with them, and they do feel that they need to add durable liquidity. That actually ties into what's happening on the currency because, earlier, at least until last year, we had foreign inflows. They were taking out those foreign inflows. They were putting in durable rupee liquidity. Now we have turned to foreign outflows. So whatever was being put in terms of liquidity via foreign market, foreign exchange interventions is now perhaps coming in through OMO. That's one thinking in the market. But that OMO, if it does continue, could prove to be lasting in terms of its impact on yields. I think yesterday we closed about 10 basis points lower. Let's see if another OMO comes relatively soon to make the point that the RBI intends to continue with this. Interesting.
And the currency, I know a lot of people would talk about the domestic factors at play, but when I read a lot of global opinion, I was reading one from an ICICI Management, it's a Canadian-based firm, a lot of them are talking about a quote-unquote face-ripping rally in the dollar vis-a-vis all baskets of currencies, and they believe that this won't stop here due to a multitude of factors. Now, and I think in the chart you pointed as well that it's not just the rupee. Some of the other currencies also are at play out here and weakening consistently against the dollar. So it may not be all only or largely due to domestic factors. A large portion could well be the global factor at play.
Certainly. I think there was another article again on Bloomberg News saying that bond funds, global bond funds, EM bond funds have seen outflows for 2 consecutive weeks. So, there are 2 trends at play. One is that foreign investors or global investors are taking some money off the table in terms of exposure to EM bonds. That is one. And then the second is what is happening to the dollar. I think there are, people on both sides of the debate as to whether the dollar will continue strengthening or not. Some people believe it will. We had spoken to Jahangir Aziz of JP Morgan. Their house call is that the dollar will not strengthen meaningfully this year, even though they expect the Fed to continue hiking. So, that dollar story has to play out. The oil story has to play out. Domestically, of course, we've got some issues of our own. But I don't think those issues are so overwhelming that the pressure on the Indian rupee would be dramatically higher than what is being seen across peer countries. Even if you ignore, you should ignore the Argentines and the Turkish liras in comparison to India. But the Indonesias and the Philippine peso, which are broadly, comparable basket of currencies, I don't think we would be dramatically away from the trend in those currencies, at least not based on what we have so far.
Interesting. Let's wait and watch. So that's part one of First Word. Let's get on to the second story, and that's ICICI Bank. They took a hit in the fourth quarter as the RBI's new stressed asset norms kicked in, a surge in both bad loan recognition and the provisions for it. But the proceeds from ICICI Securities stake sale provided some cushion. Shraddha is standing by with the big takeaways from the quarter. Shraddha, pretty much on expected lines.
Well, yes, it was more or less in line with what the estimates were, and there were no big surprises apart from the jump in asset quality numbers, which were more or less expected. So the net profit halved to about 1,020 crores, but I have to mention that that was on account of a small tax write-back and also gains of about 3,200 crores coming in from the ICICI Securities stake sale, because if it were not for this, you could probably have seen a net loss for the quarter. But profit of 1,020 crores. That apart, even on the business growth, the momentum continued with the domestic loan growth inching up to 15% from about 10% YOY growth in the December ended quarter, largely led by retail loans, a strong 21% growth. Deposit growth also continued around 14%. The numbers similar to what we have seen in the last 2 or 3 quarters. The impact of the RBI circular was the addition of nearly 10,000 crores to gross NPAs, and that took the gross NPA ratio to a near double digit of 9.90% that we saw in this quarter, as compared to, if we move on to the next slide, we will see those numbers. So slippages inched up from 4.5% to 15,000 crores. The good part is that the watch list was brought down sizably from 19,000 crores in December to 4,700 crores. So more or less a huge reduction on the drill down list over there. However, the bank has managed to do good work as far as recoveries and upgrades are concerned. We saw recoveries and upgrades of 4,200 crores during the quarter, as compared to about 1,100 crores in the previous quarter, and that to a large extent has helped with respect to making provisions and supporting the bottom line. That apart, with respect to the exposure to NCLTs, the bank did mention that they haven't used the RBI dispensation to spread M2M losses on bonds, but they did take into account the dispensation where the RBI allowed lower provision cover of 40% for the NCLT exposures, as compared to the previous requirement of 50% for the March ended quarter. So as of December, they had a aggregate provision cover of nearly 46-47%, and that has risen to about 50% on the two lists exposure combined. So they hadn't have to do much on the provisioning on this front. So clearly the big jump in provision has come from the slippages coming in on account of the watch list reduction and the RBI circular. So that's as far as the NCLT exposure are concerned. That apart, the good news is also that they did mention that there is no need for reporting divergence for the FY17 audit, which means that the NPA differential would be less than 15%. And of course, they also said that there was no discussion on the Videocon matter that came up, and Chanda Kochhar did say that the board stance remains unchanged from what they had previously said. So on the back of that, brokerages have taken note of that, and they do believe that that management overhang will remain on the stock, but more or less they have maintained their stance on the stock. Why? 2 reasons. One, they believe that the stress recognition has more or less been done. Some residual stress is there, which could mean higher provisioning and credit costs for FY19, but most of it is done. And secondly, valuations at current levels are not demanding. So you have Credit Suisse is the only one which has taken a target price cut of about 11 to 12%. You have Jefferies and some of the other brokerages such as Philips Securities, Prabhudas Lilladher, Motilal Oswal, all of them tweaking the target prices upwards by about 2.5 to 3%, but largely no big surprise or something that wasn't expected. And despite that 2.5% up move yesterday, the ADRs also ended about 4.5%, so that probably tells us how it's going to react.
Thanks so much for that, Shraddha. Just a brief mention of the fact that there is a board meeting today as well. Chanda Kochhar said it's a regular strategy board meeting. But I think we should watch it quite closely. Anyway, that's ICICI Bank. Of course, you know, one of the trouble spots for banks continues to be power-stressed assets. It has been said time and time again that while stress in the steel sector has been recognized, stress in the power sector has not been recognized. Now, first, there were efforts being led by the Power Ministry to come up with some sort of a plan to resolve these assets collectively. That plan has not worked, so now there is a plan B being led by banks. What is that plan B? Vishnath Nair is here with the details. Vishnath.
Right, yeah. So this plan B actually, you know, it bases itself, and the linchpin of this entire plan is an asset management company that the lenders are planning to float. Of course, this is all in the proposal stage, and SBI is leading the charge from the bankers' side. This AMC, or this asset management company, is essentially going to hold the debt and the equity of all of these stressed power accounts that exist on bank books. So banks will transfer all of this to the AMC. But what exactly is the AMC? To understand that, let's move to the next slide, which which points out that the AMC will be floated by banks in association with some alternate investment funds, pension funds, as well as the NIIF, which was set up by the government, the National Infrastructure Fund. That also is going to participate in this, or at least that is being talked about. There's a lot of paperwork that is still pending. SBI will do all of that in the coming months if everything works in their way. What exactly is the AMC going to do essentially is that it will buy all of this equity from the banks that they may hold in some of these power sector accounts. Remember that a lot of these were under SDR, so there will be a portion of the equity of the company that is already with the banks available with them. So that is going to move to the AMC. In the remaining debt, the banks are going to split it into sustainable and unsustainable parts, and this unsustainable part will then be converted again into equity, which will move again to the AMC. Now, if this is not enough, the AMC will appoint public sector power companies like your PFC, RECs, and NTPCs of the world, which will act as operational agents. They will work on a fee, and they will just run the company, ensure that the basic operations are running. It's important to note that the AMC, while doing all of this, while managing these companies for a period of about 5 years, they will also be looking at buyers, actively searching for buyers who will come in and buy these assets off the AMC, and that money will be used to repay the banks. At least that is the basic structure that is coming up. In case of the promoters, though, that is because that is an important bit here. The promoters of these stressed assets are also being taken to task by State Bank of India. Essentially, they're saying that whatever equity you hold, a large portion of that will be sold to the AMC at a significant haircut, to a point where promoter equity falls below 25%, and they can't really, meddle with the way the companies run or try and influence it in any fashion. Once they have found these buyers, of course, a lot of these banks are going to get repaid. A lot of the debt is going to come back, or that is the expectation. What does SBI still have to do? Well, it has to get all of these stakeholders on board. It has to sign binding agreements with all of them. It also has to get state governments to agree that the distribution companies in each state is not going to cancel the power purchase agreement just because the ownership of these stressed power assets has moved from promoters to the AMC, because it's important. If that gets cancelled, then there is nothing that the company can do to sell the power and earn money. Apart from all of this, it has to get the RBI to agree to all of this, which is going to be a big task, because the RBI has very clearly said it is not going to go back on its Feb 12 circular. And unless that happens, unless the RBI gives some kind of a leeway, then this plan makes no sense, because otherwise, after the 180-day period of the Feb 12 circular, these accounts will go into NCLT. Bankers are worried there are no buyers in the market, so NCLT accounts will lead to large haircuts, and then you can't do anything about these power sector loans. About 1.8 lakh crore, so it's a large amount of loans, and they're worried that that hit is going to come to them in the next couple of quarters.
Okay, pop quiz, Vishnath. What does this plan remind you of?
Well, a bunch of other things, right? They came up last year with something where they tried to sell it to NTPC. That didn't work out because NTPC wasn't interested. They tried to revive it again, but NTPC again said, we're not interested, so they completely abandoned the plan. They again tried to, this also reminds you of what happened with Dabhol power plant. Similarly, brought in NTPC and GAIL to run the operations, try and stabilize the whole thing, but there was no gas, so there was no way that the power plant could run, and there was no way that it could make money. Banks, again, IDBI, ICICI, SBI, everybody wrote to the ministry, tried to get the government to act. Nothing happened. This was the last government, of course, but nothing happened there.
So, also 2016, when this whole stressed asset problem started, they wanted to do a stressed asset fund, which the RBI said no.
ICICI was trying to come up with some form of structure. They worked on it for months. The RBI never approved it. So, getting the regulator on board is going to be the big challenge here. The government is meeting them today. That's what we get to know from some of these government officials who have spoken to us off record. But unless the RBI agrees to all of this, or at least agrees to consider some kind of a leeway for banks, there's no way out.
All right, Vishnath, thanks so much for that. Just a quick note that we spoke officially to the Power Secretary Ajay Kumar Bhalla about this whole issue, and that conversation comes up at 9:30.
Well, so you can't afford to miss that either, amongst other things on Indian Open on Bloomberg Quint. The last piece on First Word today is Jamie Dimon. He chose to ignore Donald Trump's tweets and focus more on the work done on the ground. The chairman and CEO of JP Morgan Chase says that the new trade deal with South Korea shows that the Trump administration is willing to work out a mutually agreeable deal with other nations. He was speaking to Bloomberg News' Stephen Engels in Beijing. Here's a small slice from that conversation.
I think that they're just getting to know each other, and there are some very complex issues. And they laid out, which I think is good. They laid out what they want from the American side, and the Chinese side laid out what they want, and that's how you start the conversation. And now they're working on specific things. What do you mean by that? And so hopefully they'll make progress. We need there to be progress to be made.
Do you think a trade war is possible?
It's always possible, but it's not the preference for. I hope it's not the preference for either side.
Yeah. Do you think their list of demands are too far apart, though? It's going to take quite a while.
No.
No.
No. I think when you go to trade, you talk about intellectual property or tariffs or equity caps and where you can invest and how you protect investments, and it gets into a lot of detail. But there's no reason it can't be bridged. And if both sides have good faith, if they don't, then it may not be bridged, and then you have a different economic relationship between the United States and China.
You believe there's good faith? I know Stephen Roach, formerly of your competitor, he says that the U.S. approach has been all stick, no carrot. Yeah, I don't know about that. I mean, like I said, the president's laid out certain issues that a lot of the business community would agree with around equity caps, transfer of property, non-tariff barriers. And I think the Chinese know that some of those are true, but they're not going to give in to anything if they know exactly what the deal is going to be or something like that. The President Trump would also say he's got a great relationship with President Xi. They built up a bond of trust, that he wants some of these trade things fixed. And our president has laid out some very tough things, but he's also negotiated. In other cases, I pay a little less attention to tweets, a little more attention to what are they negotiating, what's on the ground. They did a free trade deal with Korea. Mm-hmm. We negotiated it.
Yes, and they're talking about, from what I hear, they're talking about having an agreement in principle on NAFTA, hopefully next week or two. So, it is doable. And I think both sides do want it. So I do think there's goodwill there.
Well, that's what Warren Buffett and Charlie Munger incidentally said as well. But let's not get there. We've done that all through the weekend. For now, let's just take a break. That's all that we have on First Word today. Before we proceed to the session and the break, here's a quick reminder of what we have lined up for you later on in the show. Pashupati Advani of Global Foray. He's got a very to-the-moment mind on what could be happening in trade. So we get him in on what's happening very, very recently with some of these small caps as well. We decode the Visakha earnings Q4 with whole-time director and CFO V. Valinath, and of course talk to the Power Secretary as well. All of that a bit later on. But for now, take a break and full tilt towards the day's trade on the other side.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Bloomberg Quint has tried to bring about a different approach to business news, economic news and equity market news over the last few months that we've launched. We are now adding a fourth large element to our coverage with the launch of Portfolio, a brand new personal finance offering with a very special bunch of guests to talk about how people can plan their financials and create a robust portfolio.
I need a return of around 10% just to deal with inflation. If over and above that, I have some modest goals around children's education, my own retirement savings and so on, it's very difficult to live in India without having a portfolio which is throwing off 15% with reasonable amount of regularity.
Choose stocks where the companies have a unique DNA to overcome evolutionary changes or disruptive changes, both inside as well as outside that company.
As the name suggests, portfolio will try and address your portfolio queries. How should you allocate or asset allocate, and what should be the quantum within each of the sections to ensure that your portfolio easily enables you to meet the goals that you may have.
Welcome back. You're watching Indian Open. Let's take a look at how the Asian markets are faring right now. Well, green is what we're looking at when it comes to the Nikkei, up 0.3%. A little more strength coming in as far as Shanghai is concerned, 0.5% in the green. And Hang Seng advancing by as much as 1%. Taking a look at the SGX Nifty too, well, up as much as 0.2% for now, steady about the mark of 10,700. But let's also take a look at what the derivatives are telling us and the kind of indications they're giving us. We have Navneet Saluja joining us. Navneet, good morning.
Good morning, Agam. Well, it's green across the board this morning, and we will be watching out for a couple of the banking stocks, as yesterday there was a big move seen for ICICI Bank. So for Nifty, no major build-up, but pull-up Bank Nifty, that's going to be in focus today. As you look at the open interest build-up, 14% higher, but also keep in mind the futures closed at a discount of nearly 5 points, and in that, a heavy weight like ICICI Bank will be in focus today. Besides that, the India Volatility Index, despite of markets being higher in yesterday's session, we did see the India VIX also inching higher, and likely India VIX will remain at elevated levels at least till the Karnataka elections. In terms of option strikes yesterday, there was more of put trading which took place, hence we saw the markets also moving higher. So look at this, 10,600 as well as the 10,700 put strikes, saw huge amount of riding coming about, and on the call side there was some unwinding seen for the 10,700 and the 10,800 strikes. Well, what did the FIs do in yesterday's session? No major additions seen on the index futures front, so they did add some bit of long shed shots. But if you look at the index options data, one trend that we've been highlighting, they've been buying a lot of protection via put long. So yesterday also almost 11,000 contracts were added for put longs. In terms of stock futures today, well, keep an eye on Work Hard, as that's the new entrant in the F&O ban. It was down nearly 7% in yesterday's session, and definitely watch out for PC Jewelers as that one comes out of the F&O ban. Let's see now if there are fresh shots build up after the stock has nearly doubled in the last 3 trading session. And lastly, do keep an eye on XI. The stock went up yesterday. Fresh long positions were seen after the numbers were better than what the street estimated. Back to you guys.
Thanks a lot for that, Navneet. Well, I would urge viewers to watch, amongst other things, countdown at about post 3 o'clock. At 3:10, we tell you about possibilities of stock entering or coming out of the F&O ban. We flagged off PC Jewelers yesterday, and of course we don't know what will the reaction of traders on the stock be, but since it's out of the ban, traders do have an option of initiating short positions on it as well. We flagged this off in yesterday's session. Anyways, lots more to talk about beyond PC Jewelers. That's a constant topic of conversation. So let's get in Mayuresh Joshi, fund manager at Angel Broking, who joins us right now on the show with his thoughts on markets, specific stocks and earnings. Mayuresh, let me take off from the last thing that I mentioned, which is earnings. Good morning and thanks so much for joining in. What did you make of ICICI Bank earnings and the fact that there is one more meeting scheduled today, which arguably is for non-CEO related matters? But I'm guessing the street would want to watch it closely.
Oh, it would, Neeraj. Very good morning to you as well. So a large element in terms of the numbers per se. I think the numbers were, again, in line with what we were probably expecting. The loan growth a tad bit better. So what they've probably done in terms of retail advances at 21% odd, I think that's commendable, and that's de-risking their portfolio as the management had put forth. And you're obviously seeing signs with CASA improving significantly, and even in the non-interest income part, retail fees now form almost 2/3. And that's clearly got reflected in domestic NIMs, which stood at 3.67%, and the overall NIMs at 3.24%. So that's an encouraging sign. The other element in terms of slippages, which saw a 4-fold increase, again a large element in terms of the RBI circular, which came through 9,900 odd crores, recognized through all different schemes that the bank was reporting in its erstwhile quarters. And along with that, I think whatever else has got recognized with the watch list coming down significantly to 4,000 odd crores, I think that's a positive sign in terms of cleanup. And as the management indicated, again, a large part of that stress has got recognized. So the element here is over the last 4 to 6, 8 quarters, we were discussing asset quality pressures for ICICI Bank. Going ahead, I think it's going to be more to do with the earnings and growth outlook. And with the numbers that you're probably seeing on the retail front, the de-risking of their portfolio and recognition of the watch list or the asset quality stress on their books, I think as credit growth starts picking up meaningfully and the loan growth that we've probably seen is quite commendable in periods like this, along with expectations of recoveries and upgrades, which stood at 4,000 odd crores again. I think there is significant accretion happening on the advances side as well. So all in all, I think my sense is that we remain positive on the stock over the next 1 to 2 years. And even from a valuation perspective, at 1.4 times price to adjusted book, I believe it's one of the cheapest stocks that is available in terms of the growth potential and the ROEs, as the management is saying, that it can achieve.
And Mayuresh, good morning. This is Agam here. How do Yes Bank and Axis Bank stack up then in comparison?
No, so Yes Bank, Agam, also looks very, very interesting because what they have probably reported in terms of advances growth, I think far better than what the industry has probably done. And again, the management is extremely optimistic in terms of continuing this growth going ahead as well. So again, in terms of balance sheet expansion, in terms of building up their CASA book to 40-odd%, they're probably going to do that much earlier than an envisaged targets. The second element in terms of the divergence that the bank had earlier reported with RBI and because of which it got a hammering. Again, I think it's far more proactive in the sense of providing more, and the provisions will keep on increasing going forward. So a large element in terms of advances growing better than the industry, asset quality stress probably peaking off, credit costs again normalizing to a large extent, and that probably having a positive effect in terms of reported NIMs and spreads that the bank will report. I think that itself gives the confidence that the balance sheet expansion can be on a humongous track going ahead compared to the others. For Axis Bank, again, I think the numbers were far better in the sense that the expectations of FY19 and 20 numbers with a large cleanup, as the management is saying, and if one anticipates that to be the case, I think the stress similar to ICICI Bank might not be that evident over the next few quarters. Again, the de-risking strategy that Axis Bank is following in terms of retail advances like ICICI Bank probably working in its favor. But again, from a valuation perspective, my own sense is that ICICI Bank still takes the top slot for the corporate-facing banks, private banks, compared to Axis at this point of time. And yes, it's something that we like as a structural story over the longer term.
Okay, hold that thought, Mayuresh. Let's take stock of all the earnings that have come, as well as several news that we are tracking, which can possibly impact stocks in today's day of trade. Of course, we also have a sector in focus and plenty of earnings coming in today as well. So we have a research team joining us right now. Good morning, guys. Shada, let me start off with you as usual. Stocks in news today.
PNB Housing Finance, Agam, where Carlyle Group Arm Quality Investment Holdings is looking to sell about 4.8% stake. The floor price has been set at 1820 per share. That's a 6.8% discount to the NSE closing price yesterday. The stock will remain under pressure on account of that. And do remember that you had ETE and some other media reports saying that Carlyle was looking to sell about or up to 10% stake in the next 12 months. This was an April report, so more or less a known fact. Tata Metallics says that operations at Kharagpur plant have stopped due to issues with the worker union. Vito Switch Gears, that's a smaller company, market cap of just about 400 crores. They've received an order worth 25 crores. You may see some reaction on the smaller name. ET report says that Nestle will pay up for failing to pass on GST cut benefits, so it's going the HUL way. In bulk deals, you have BEML, where Tata AIG Insurance Company has bought 0.7% stake, and an insider's trades apart from Deccan Gold Mines, which Neeraj already spoke about. The Quality Limited promoter Sanjay Dhingra bought about 9.13 lakh shares on May 4th. So that's another name to watch out for.
Right. Of course, there were plenty of earnings post-market which also came. Darshan, what's on your list?
Yeah, so a couple of good earnings. First of all, I think MNC pharma companies have continued to with the good runs. Of Pfizer came out with a strong set of numbers. Revenues were up almost 20%. Profit was up almost 40%, and margin expanded to 27% versus 21% 4%. So continuing from the good trend that we saw in the third quarter, MNC pharma companies do well. JK Agri, it's a very small cap company, but nevertheless numbers are good. Revenues is up almost 150%. They've reported a profit of 5.6 crores versus a loss of 6 crores last time around. EBITDA margins at 20% versus an EBITDA loss last time around. Talwar Better Fitness also came out with a strong set of numbers. Revenues were up 20%, profit up 30%, and margins expanding to 69%. Also, they've got the in-principle approval from the exchanges to list the lifestyle business. What didn't do well, Trident, very average set of numbers. Revenues were down 6%, profit was down 50%, and that was on account of an exceptional last year around. But even EBITDA was just up 3%. And finally, Tata Coffee came out with a very poor set of numbers despite revenues being up 10%. EBITDA was down 67%, and profit was down almost 86% for the company, which probably will react negatively today.
Of course, there are two other companies that I'm tracking in today's day of trade, and let's just go through what we can expect from Godrej Consumer and Jubilant Foodworks. Starting off with Godrej Consumer, well, we're expecting revenues to move up by as much as nearly 10% on a year-on-year basis, and EBITDA margins are likely to expand to a certain extent at around 23.6%. We're also expecting profitability to consequently move up by around 14% year-on-year. Now, we're expecting volumes growth for soaps to be anywhere around 8 to 10%, and expecting an uptick in hair care as well as home insecticides, which has been relatively volatile over the previous few quarters as well. And margins, of course, are expected to expand on the back of the cost rationalization that the company has been carrying out over the previous few quarters. Now, moving on to Jubilant Foodworks, and this will be an interesting one. We are likely to see a multi-year high when it comes to same-store sales growth. But I'm going to start off with your revenues, seeing an uptick likely to see an uptick of around 23%. Margins expected to come in at 15.9% against 10%, and consequently we could see profitability, and this is on an adjusted basis, move up. However, your reported profits could see a decline of 19%, but that is because the base quarter had an exceptional income. As I spoke about, we're expecting same-store sales growth for this particular quarter to be at anywhere between 20 to 24%, and a large chunk of this growth will be owing to the price hikes that they've taken for the quarter. Of course, employee costs will be key watchable, considering that's the largest expense, and rent costs as well, whether or not they have seen some renegotiations and they've had some advantages coming out, and how they can pan out for margins. So that's as far as these two companies go. But there's yet another sector which remains in focus today, and that's the steel sector. Nikki?
So we're expecting a good set of profitability for these companies in the upcoming quarter on back of the price hike that the companies have taken for the month of May. Domestic, we have a Deutsche Bank report in Indian Steel which has said that the major Indian steel producer have taken a price hike to the tune of $12 to $15 per ton in Indian currency. That's almost rupees 752,000 per ton on back of the higher global domestic HRC prices. Domestically, HRC prices have increased as much as 14% over the last 6 months, and now are trading near those 9-year high level. Also, we've seen a significant decline coming in on account of the raw material prices, because of which we are seeing higher spread. Almost 8% increase in spread is what the research report has pointed out for these domestic players, on account of which they're seeing higher profitability. They prefer JSW Steel, given that it's a non-integrated player. Second in the list, we have Macquarie Research, which has said that the hike is in the tune of $10 to $15 per ton. It has also said that the steel prices in China have rebounded by as much as 10% from the lows, and it also says that the weak raw material price is expected to aid the margin growth. However, it prefers Tata Steel as compared to JSW Steel on account of the higher sensitivity that Tata Steel shares, both in terms of the price and the cost pressures, globally, as well as the domestic steel prices.
Okay, thanks guys for joining us and giving us those updates. But Mayuresh, coming back to the quick service restaurant business, last week we saw KFC India, or rather should I say Yum Brands India, come up with very good numbers in terms of system sales. We are expecting good growth to come in as far as Jubilant Foodworks is concerned as well, and Westlife Development, of course, will later on in the week announce its earnings. What's your call on this particular subsector, if I may call it, and do you like anything, or are you still, should I say, well, cautious when it comes to this particular area?
No, so the sector, obviously, Argam is doing exceedingly well. So the QSR sector as a whole, I think, apart from the biggies that you probably talked about, there is intense competition. So you look at the local pizza guys, for example. I think you've got many players probably in this space at this point of time. But coming specifically to, say, a Jubilant, I think the SSG growth is expected to be very, very strong, as you pointed out. The other elements in terms of rental expenses and employee expenses, as in the case with other entities as well, I think they always remain part of your balance sheet. So I think the expenses on that count can be renegotiated, you said, but to a tad bit itself. So I think the efficiencies probably come on two counts. A, in terms of the volumes and the increase in volumes that you can probably sustainably grow, keeping a tab in terms of the input costs as well, and how you're able to pass those realizations through. And the second element obviously is going to be overall cost optimization. So I think how profitably you can probably run each individual store, and every new store opening that probably comes through, the payback period or the break-even point that can get achieved within the desired timelines. So again, I think stocks like Westlife, Jubilant, obviously expecting very strong SSG growth to probably come through. As you rightly pointed out, I think pass-through in terms of price hikes and realization growth should be evident. How much does that impact volumes going ahead, I think, is something that the managements would adhere to in their con calls. But Westlife is something that I've continued to like at lower levels. Jubilant probably, I think, expecting good set of numbers, but valuations again a tad bit on the higher side. So again, Westlife is something that I'll continue to prefer over a longer period of time.
Okay, Mayuresh, stay on. So much more to talk about. It's 8:45, that time of the show, wherein we should talk about the technicals and how are the charts looking. Hadrien Mendonca, he's senior technical analyst at IIFL, joins us right now on the show. In moments from now, Shrikant, Chouhan will be joining in as well. Hadrien, good morning. Thanks so much for joining in. It's playing as per script. I remember the last conversation you spoke about how if the markets break a few levels, then there are possibilities of some more highs. But just break it down for us. If you are an index trader, and if you want to enter into a trade today, does the bank Nifty look a lot more solid for a trade compared to the Nifty?
Yes, absolutely. Good morning, first of all, Neeraj. And as far as the bank Nifty is concerned, absolutely, it's looking pretty strong if you compare it with the Nifty. In the previous week as well, we spoke about the 10,600, 10,550 zone, going to act as a very strong support. And, evidently it has worked out pretty well. So, anyone who's listening to us, would have actually taken a, long trade on a Nifty around 10,600 and I think would have made wonders in yesterday's trade. So I think coming to the bank Nifty, since breaking above that inverse head and shoulder pattern which we spoke about, has very well sustained above the same. In fact, if I break it down to the daily chart analysis, I think yesterday itself we have seen another 4-day consolidation breakout. So I think there are multiple breakouts happening in the larger as well as the smaller time frames, and I think this is a clear indication of strength. And if bank Nifty is going to move higher, I don't think so Nifty would lag far off for too long. So I think definitely if anybody who is wanting to take a trade, who should definitely go long on a Nifty. And the immediate resistance on the upside, in my opinion, is coming close to the 10,800 zone. As far as the bank Nifty is concerned, the immediate resistance on the upside is coming close to another 200 to 250 points upside. That is coming close to 26,000 on a bank Nifty.
Okay, we also have Shrikant Chouhan, Senior Vice President Technical Research at Kotak Securities, joining us. Shrikant, good morning. What is your view on the benchmark indices right now, and what cues are you picking up?
Good morning. See, for indices, our view is that they are going to remain in a range, especially for Nifty. 10,800, 10,600 is going to act as a range for next few days until the market is not crossing 10,790. I think close to 10,790, I'm going to say close to 10,750, 760 levels. If we see a market is bouncing today or opening around those levels, then there we should look for creating some short positions with a stop loss at 10,790. Again, on the downside, we can expect 10,670 or 650. So broadly, we are expecting range bound activity for Nifty. For Bank Nifty, yes, it is very clearly into rising trend, but it is now far away from its support areas and very close to resistance area of 25,950, 970. So close to those levels, we are expecting some profit taking or some reversal. So it is better to create some short positions on Nifty instead of like creating any long position if we see any higher opening.
Interesting. So contrasting views, one for the short term right now, one for maybe a small positional call. Whoever you follow, you can take a call accordingly. Before we move to stock specific calls from our experts, it's 8:50. So it's time for our special segment, Bloomberg Edge, wherein Jayesh Kilnani talks about a pattern that the Bloomberg terminal is throwing up on a stock. And Jayesh, what's the stock on the radar today?
Morning, Neeraj. I'm watching out for Tata Steel, but mind you that most of the metal stocks were there in the list, so all of them could be in focus, but Tata Steel really stood out for me on the fear and greed indicator. Now, it's a proprietary Bloomberg indicator, and it has turned positive as of yesterday's close. Let's have a look at how the indicator actually works. Like I was telling you, it's a proprietary indicator and it uses the spread of two weighted moving averages as one of the key inputs for calculation. And it oscillates on a zero baseline and therefore becomes very easy to interpret. Simply follow the color to get your buy and sell signal. So you buy when red turns into green and you sell when green turns into red. And you know, the other way around, the chart of Tata Steel. If you can see the bottom panel over here, that's the fear and greed. And as of yesterday's close, you can see a small green bar over here which indicates that this has turned positive, and in fact there's a buy signal on Tata Steel. Interestingly, what's happened is there are two other counters from the metal space, JSW Steel and Jindal Steel as well, which have turned positive, but this one really stood out for me because of the past performance. Average return for next 10 days should be about 7.5% in the past.
All right, Jayesh, thanks for joining us.
Actually, sorry, Agam, just before we move ahead, Jayesh, just wondering, have you done some back testing?
Yes, Neeraj. So average return over next 10 days would be about 7 to 7.5%.
Okay, so and it's shown in the charts as well. Whenever this has happened, it tends to move up.
Yes, that's right.
Okay, great. Jayesh, thanks so much for putting that into perspective. Sorry, Agam.
Okay, so, well, let's just go across to our technical experts and take their stock calls for the day. Hadrien, I'll come back to you. What are you trading today?
Yes, so both the calls are, on the long side. So first is Ashok Leyland. All the auto sectors, all the stocks among the auto stock sectors are coming back, especially M&M as well. But Ashok Leyland is something that we are preferring, and one can consider buying Ashok Leyland at these levels, play for a target of 171 and keep a stop loss at 162. Second stock that we're bullish on is GAIL. In fact, it's not only today's call, but also, a delivery-based week or two call, because GAIL is really showing signs of resumption of an uptrend that, we saw, losing in the past 3 to 4 weeks. So, one can consider buying GAIL at these levels for a target of 355 and place a stop loss at 339.
All right, Shrikant, what about you? What are you playing today?
Neeraj, as we are expecting market to remain in a range, we are of the view that we should look for adding those stocks which are not parallel to index and which are from the mid-cap category. The very first which we like is Raymond's, and it is doing extremely well. It entered into new highs when the market is still below the mark of 11,000. From here we are expecting Raymond is heading for 1190, 1200. Currently it is around 1130, 1140. So with a stop loss at 1100, we should look for creating long position in Raymond's at current levels. The other stock which we like is HDFC Life, and the stock has corrected very well from its high of 550, 560. ICICI Prudential was also like correcting, and again it recovered back from its support area. So here also we are expecting similar kind of formation, very close to support area. So with a stop loss at 494. If we initiate long position in HDFC Life, then that should yield, because the next level to watch out for is on immediate basis is 515, and maybe in the near term, in next 5-7 days, we are expecting 530, 535 on the higher side.
Very interesting though. HDFC Life, after having that big day post ICICI approves results and the result move, has cooled off, went up to 531 or 532 and has come off quite dramatically from those levels. Okay, a lot of questions on our social media about trades on ICICI Bank, so just want to take that once before we get back to Mayuresh. Hadrien, for somebody who's either got calls or a long trade yesterday in ICICI Bank, if the stock starts off about 1.5% higher, what would you do?
Yeah, one should definitely try and book some profits. So at least exit 50% of your positions, and then wait for the stock to actually trend whichever side it wants to, and then take a call. But I think if we open 1.5% higher, I think one should at least book 50% profits.
All right. Well, we have seen some traction in Jubilant Foodworks. Let's take a chart check before we see its results come out. Shrikant, anything that you see on Jubilant Foodworks and how you're expecting that stock to react, at least before trade?
See, Jubilant Food is also doing extremely well, and it is like just going up consistently. But this time result is like more or less discounted because a lot of research has happened in last several months, and it was close to some 1850. From there all the way it is trading at 2650. So I'm of the view that close to these levels, 2650, 2700 levels, profit taking should come, and buying is advisable only and only if there is a correction in the stock, or if market corrects because of any reason, then only. Otherwise just stay away. I'm of the view that it is going to remain in a range of 2750 on the high side and 2500 on the downside. So if it falls to 2500, 2450, then certainly it's a buy. But at this price, just avoid.
Okay. Mayuresh, yesterday, post Exide numbers, we saw a fair bit of brisk activity in both Exide and Amara Raja. What's the house view on the battery makers? Which one do you like out of the two?
So obviously Amara Neeraj was our preferred choice, but Exide has not done too badly as well. So I think the results specifically in terms of the reported margins were far better than what the street was expecting, largely in lieu of lead prices actually moving higher over the last few weeks and quarters. Having said that, I think the mix is going to be extremely critical for these battery makers. Now, lead prices staying at elevated levels, I think the pass-through, at least in terms of OEM pricing, can actually come through. But what probably happens in terms of the replacement market and the industrial segment, which is required to create the necessary leverage on their balance sheets, is extremely critical. For Amara Raja in particular, I think the entire thesis in terms of the capex that they've done to expand both their two-wheeler and four-wheeler facilities, battery facilities, I think that probably should hold them in good stead. And again, let's be factually clear. I think the underperformance of Amara Raja, both in terms of margins and cash flows, were very, very evident. But looking at auto numbers, I think battery makers probably in a sweet spot. So coming back to the point of valuations, probably valuations on historical mean averages, probably looking at fair levels. But if one really has been holding these stocks at lower levels, I think you should continue holding on. The leverage in terms of both volume growth, along with pass-through that you've probably seen in the OEM side of their business, along with expectations of strong growth coming back on the industrial and the replacement side, should actually sustain their earnings momentum going ahead as well. So I think it's a clear hold on both these battery makers who probably have a lion's share in the unorganized battery market.
Okay, well, we did see a little bit of an uptick when it comes to some of these metal companies as well. Hindalco and Tata Steel did move up. Let's just take up Hindalco and see what's happening, because we have seen a lot of volatility. This is largely owing to the volatility that we've seen in aluminium prices. For now, it's currently trading at around 200 and, well, a little over, yeah, 237. Shrikant, if I can take a view on Hindalco, what's going on the charts? What are these variables indicating for this one?
Agam, see, this one is doing extremely well. The stock was into new highs when there was bullishness in the broader market. I mean to say, when the market was close to 11,000 level, Hindalco was quoting at 284. Vedanta was also quoting somewhere close to 350, 360 levels. But this was the only stock which was into new highs as compared to other metal stocks. So, yeah, exceptional. Like JSW Steel was the exception, but Hindalco was the real outperformer. And now the stock has corrected to its important support areas. So I'm of the view that again this stock is going to outperform in next few weeks or few months of time. And at this price, it's a great buy because the risk-reward ratio is quite favorable. Currently, it is around 237, 235 levels. We are of the view that now 220, 225 is going to act as a very good support for it, and it is heading for again 285 or 300 in next couple of weeks. So it's a buy at this price.
Okay, so it's a buy at this price. That's the view on Hindalco. We're just about 30 seconds away from pre-open. So let's take a look at where the Asian markets are currently trading at. We did see strength earlier in the session, and let's see if that strength continues in today. Right now, as of now, yes, it's largely the same when it comes to the Nikkei, up 0.3%, a little less than 1% gain coming in for Shanghai, and Hang Seng well up as much as 1.2%. The SGX Nifty again, not too much has changed. That's up as much as 0.2% as well, and currently trading near the 10,800 mark. But when it comes to the Nifty, now we're starting to get some pre-open rates. The Nifty opening with a negative tick of 0.5%. Sensex, on the other hand, up as much as 0.2%. We'll have to wait for these prices to stabilize. So largely flat, however, as far as the benchmarks go. Let's take a look at ICICI Bank and see where the pre-open rates are. Well, okay, so there you have it, about 2.5% increase coming in there. Among other counters which were buzzing in trade yesterday, we saw strength coming in GAIL, and GAIL was up and about. In fact, Hadrien also has a view on GAIL. GAIL remains marginally in the green for now, largely unchanged as far as the stock price is concerned. And M&M, along with several other auto companies, also doing well yesterday. M&M also remains unchanged. Let's take a look at Axis Bank as well and see where that's trading at. Axis Bank, of course, had advanced to over 530 yesterday, showing a negative tick of around 0.6%. And Hindalco, as has been the case, and we've been talking about the price movements there, it's down by as much as 2.8% for now, but that's only pre-open. We did see substantial weakness in pharmaceuticals names yesterday, and Lupin is one of them. Okay, Sun Pharma, of course, was also declining yesterday, and that's largely flattish. Lupin up as much as 1.4%. Let's wait and watch whether or not there will be short covering in today's day of trade. And Cipla as well, which was quite weak yesterday, well, that's also showing a little bit of an uptick. So as far as the pre-open rates are concerned, sure, chances of short covering as of now.
Yeah, let's just wait for the open rates to come in for a lot of these names. Meanwhile, PNB Housing Finance already showing its hand, down about 5.5. Could well drift lower. Remember, the base rate much lower than the current price as well. Let's wait and watch. Wakrangi, another 5% down in the pre-open session. Just Dial having some downticks as well, and Avenue Supermarts continues to grind lower. PC Jewelers for now is not showing any kind of nervousness. Let's wait and watch what happens there. But the big boy ICICI Bank is seemingly starting off like the man of the match today. Let's wait and watch. Early days as yet. Just a couple of minutes done in the pre-open session. Let's wait and watch. Meanwhile, the currency 67.17. So some more weakening there. 3 odd pairs if I'm not wrong. 67.14 was the close yesterday for the rupee. 67.15 now. No, flattish start for the rupee. The bond yield should come up on your screen. Some bit of fall in the yields yesterday. Today's session marginal at best. Okay, before we get to ICICI Bank and discuss that in detail, Sumit Sarkar joins us with the big brokerage calls of the day. Sumit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is IIFL on Jindal Stainless. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 107. Now, according to the brokerage, the company will further enhance its utilization levels, which will drive the volume growth for the company. Along with this, the company is also looking to expand its downstream facilities. Now, this will boost the incremental revenue and profits for the company. However, the margins would see a marginal dip because of the expansion plans that the company has. Now, the brokerage is expecting the company's volume, EBITDA and net profit to grow at a compounded annual growth rate of 11%, 9% and 25% over FY18 to FY20. Also, steady ramp up in utilization will improve the company's profitability and cash flow, which will aid the company to exit from the corporate debt restructuring scheme. Lastly, the brokerage says that the balance sheet of the company will also improve as healthy cash flow generation will lead to deleveraging of the balance sheet. Second, we have is Kotak Securities on Motherson Sumi. Now, the brokerage has maintained its sell rating on the stock with a target price of 265. Now, the brokerage has analyzed the financials of Motherson Sumi along with its international peers and says that the premium valuations of Motherson Sumi are not justified. It says that the EBIT growth, that is the earnings before interest and tax growth for Motherson Sumi, is in line with its international peers. Now, Motherson's EBIT grew at a CAGR of 11% over the last 3 years, while that of its peers grew at a CAGR of 10%. However, the return ratios, that is the return on equity and return on capital employed, is significantly inferior to that of its peers due to lower operating margins and higher working capital requirements. requirements. Lastly, it says that the investors believe that the company will deliver superior growth going forward, but according to them, this is already priced in, and that's the reason they have a sell rating on the stock.
Okay, Somit, thanks for joining us and giving us those broking calls.
ICICI Bank, Agam.
Right.
Lots of queries on the social media pages for those two stocks. One is ICICI Bank and the other one is GCPL. I want you to comment on GCPL, but firstly ICICI Bank. And likely to start off 5% higher. Mayuresh, I know we discussed the results but earlier on in the show, but we've seen surprise moves that have come into select banks like Axis post the numbers. Can ICICI Bank do an encore? That is one. And what would you do now that it's starting off about 5% higher? From an investor's perspective, what should an average investor do with ICICI Bank if he has the shares?
So again, I think, Neeraj, if one really has the shares of ICICI Bank, I think you should definitely continue holding on to them. Because as I said, I think the next few quarters is all going to be about growth. The concerns related to asset quality, I think, largely behind them. And even if there is some element of stress in terms of recognition of the remainder of the assets to be recognized in their books, I think the next quarters should be sufficient enough or should suffice the recognition of such assets. On the other hand, what you've probably seen in terms of retail advances, the retail loan book growing at a humongous pace, I think that itself is an encouraging sign for the de-risking of the portfolio and for them to achieve the targets of ROAs and ROEs that the management has set forth. And again, valuations probably very, very supportive for them. So investors holding on should hold on. New investors probably should enter the stock in a staggered way and probably continue holding over the next 12 to 15 months. We remain extremely positive on the stock.
So fundamentally looks all strong. For somebody who's got call options or charts, I think Hadrien has already said that you could book some profit. Shrikant, a quick word here. If you have long positions, either call options or trades on the futures side, would you book some profits here?
Yeah, I think for call options, certainly one can take profit because finally call options always respect to the time value. But for options, if there is any position, then for futures, if there is any position, then my view is that it is heading for the levels of 315, 320 because the stock has spent a lot of time between the range of 295 and 275, and those who have missed the opportunity of shorting on PNB, they have shorted heavily on ICICI Bank. So maybe this reaction will come, the short covering will come, and it will take the stock to maybe 315, 320 in the near term.
Okay, well, we do have some queries coming in on GCPL as well. I'd actually like to take this up on a fundamental basis. So, well, Mayuresh, I'm going to come back to you on this one. Do you have a view on GCPL? How do you find its valuations? And if it's not GCPL, then what else would you prefer?
So I think within this basket, I think purely from a valuation perspective, obviously it's not cheap. The second element in terms of the volume growth that is probably expected along with the expectations of price push-throughs and the input cost inflation that one really needs to account for, I think the volume growth specifically should be quite reasonable for their overall portfolio. But again, I think the kind of businesses that they probably run in international markets that always prone to a currency risk element. So to that bit, again, I think certain adjustments in terms of sensitivity to earnings is warranted. But again, I think most of their international subsidies are performing pretty well. So overall, I think the international business should be on a reasonable footing. The domestic business volume numbers should be far more reasonable. And again, I think it's this entire thesis of good monsoons. So if good monsoons are a reality as per the predictions, I think the second half is where I think a lot of these consumer staple stroke FMCG stocks will see a huge uptick in terms of demand coming through specifically from rural and semi-urban areas. So I think valuation is probably one of the only sore points that the stock has. But anybody holding on to the stock should clearly hold on. Out of the larger basket, obviously, I think numbers of Dabur, Marico, Dabur specifically have been good. I think Marico specifically disappointed in terms of the domestic volume growth. But I think selectively stocks like an Imami should probably do well. Yes, I think the reaction that the stock received in lieu of the reported numbers, I think any significant decline becomes a good buying opportunity. But I think GCPL, again, if anybody's holding at lower levels, should continue holding.
You know, there's some queries on sugar names. I just want to bring out one quick point here. Every morning, there's this gentleman who messages me the prices of sugar in Maharashtra and the country. The prices have not shown any sign of a pullback. In fact, after a brief uptick the last couple of days, prices have come off as well, about 2540 to 2590. So when the price of the base commodity is not showing any kind of a pickup, some measures in order to alleviate the stress might only be band-aid measures. So Balrampur Chini or some of the others, maybe a trading play here and there, but be very careful before allocating large pools of capital into these stocks, either from a long trade or a long investment perspective. I know the stocks have fallen quite a bit, but the base commodity is not showing any kind of an uptick, and until that happens, doubt that these stocks can really show a meaningful upside. So just be very careful with these names. But less than 5 minutes left for trade, so let's tell you all that you need to know to stay ahead in trade today. The street will be watching out for ABB India, Aditya Birla Capital, Godrej Consumer, Jubilant Foodworks and Kajaria Ceramics as these companies report their March quarter numbers today.
And ICICI Bank meets Q4 estimates, but profits nearly halve as provisions jump in the March quarter. However, ADR gains 4% while majority of brokerages raise price target on the bank.
And a strong March quarter for Pfizer, JK Agri Genetics, Tata Investment Corporation, as well as Talwarkar.
While Ludlow Jute and Specialities, Trident and Tube Investments of India and Tata Coffee report weak numbers.
Moving on, Carlyle Group looks to sell 4.8% stake in PNB Housing at close to a 9% discount as per the term sheet.
Don't forget, Greaves Cotton, Neela Infrastructures and IIFL will be meeting funds and analysts today.
And just keep in mind these pharma stocks, 3 or 4 of them have gotten US FDA approvals. So there could be some reactions into these. Cadila, Unichem, Cipla, Dr. Reddy's and Ajanta Pharma. And when I was speaking to Darshan, he mentioned that the Cipla approval for the drug could be an important one. So do watch out for these pharma names. All of these could well be interesting names in the session today. Mayuresh, from an investment perspective, would you go out and buy any one pharma name? And let's leave Alchem Labs out, that's too domestic focused. Anything which has got an export market?
No, again, I think if I really have to look at a pharma stock on declines, I think it would be Ipca Labs. And though I think 3 of its plants have got affected because of FDA concerns, I think a lot of effort has probably gone both in terms of the costs that they've probably incurred to probably get these plants back into reckoning. And that itself, as the FDA audit might come back, I think be a positive aspect for that. But apart from that, the domestic formulation business is the cash cow and it's doing exceedingly well. And the kind of cash flows that are probably coming from the formulation business along with expectations from the tender business that it probably caters to, I think the earnings momentum can be quite substantial. So I think any significant decline onto a stock like Ipca Labs is something that I'll probably prefer from the pharma universe.
All right, that's the view coming in on the pharmaceutical space. Mayuresh, you know, before I just go across to our experts on the technical analysis, I do want your view on steel because we've seen some hikes coming in for steel and, well, some reports are suggesting that there is a contraction in raw materials, you know, the other raw materials for some of these steel companies on the back of which we could see some advantages playing out. What is your view on some of these steel companies then, and what would you prefer?
No, so a large element, Argam, again has been that over the past few weeks, iron ore and coking coal prices had moved up. So with a lag effect, I think the increases that one probably hears about in HRC prices anywhere between 700 to 1,000 rupees a ton. I think it was a natural transition that the steel companies had to do. They have cooled off a tad bit. So both Dalian iron ore prices, coking coal prices on a landed basis have come down, and that itself is a positive sign in terms of the input costs probably going down. Now the domestic volumes have probably sustained, and the sustaining of these volumes probably gives the confidence that the reported numbers on an EBITDA per ton basis, adjusting for the price hikes that they've probably done, should probably be on a better scale going ahead. So again, I think volumes should hold up. They should probably have better realization growth, and domestic volumes looks like it should sustain going forward. So I think it's a clear hold from our side, specifically in the steel space, whether it's JSW Steel, Tata Steel, and among the other players, again, time and again, as I've been repeating, I think the integrated players, Vedanta is something which remains one of our preferred picks.
Okay, it's about 40 seconds to go. Hadrien, your top pick for now for the day?
Yeah, I'll go with an Apollo Tyres. We are seeing another consolidation breakout, so I think Apollo Tyres is all set to move towards the 300 rupees resistance zone. So one can consider buying Apollo Tyres for a target of 300 plus.
Okay, and Shrikant, how about you?
I would like to go with HDFC Life, which is currently around 500 levels. Stop loss level is nearby 494, and the next level to watch out for is 515 to 513. It's a buy, and the broader space is also doing well.
Okay, gentlemen, thanks for those ideas. The market's ready to kickstart trade. We'll have a start marginally in the green, in fact quite a bit in the green, 0.5% yet again. In fact, the Nifty Bank continues to rise and shine. All through the trade yesterday, everybody was talking about how bets should be taken in the Nifty Bank versus the Nifty. It's paying rich dividends for now. Let's wait and watch for how long it lasts. I believe ICICI Bank would have to do something with it. We'll get to know about it in moments from now. Just want to bring up the mid caps and the small caps first before we move on to ICICI Bank. Marginally higher. Okay, the heat map, and I will not be surprised if ICICI Bank is right up here at the top corner, because it was showing that the gains were there in the pre-open session, about 4.7 or 5% now for ICICI Bank. That's really the man of the match at the start of the trading session today. Some gains into stocks like Lupin as well. ITC amongst heavyweights, which is doing okay. But fair bit of green on the screen today, very little red. Infosys amongst other names, IndusInd Bank marginally off, but no big losers. HDFC Bank, though the last couple of days has seen some bit of a downtick, but really it's got to be with ICICI Bank. Let's just get that stock once up on the screen before we move on to some of the others, because really it's all about ICICI Bank today. That is one which is the highest weightage on the, in terms of the gainers. ICICI Bank is putting that gains behind the Nifty and the Nifty Bank. 11 points higher, 301. This is after a 2.5% rally in trade yesterday. What else? At the broader end of the spectrum, 3 or 4 pockets that I want to mark before I hand it over to Agam for what's happening to the larger liquid universe as well. Firstly, stocks which have come out with weak set of numbers. So Ludlow Jute, Trident, as well as Tata Coffee, and Tata Coffee and Trident in particular are succumbing to some bit of selling pressure. Textile companies haven't had the best of days this time around, and showing in this quarter around, and showing in Trident as well. Let's bring up PNB Housing Finance. That stock under pressure today for the right reasons. Carlyle talking about a stake sale at 9% discount. Or that's the base really. A stock starting off about 7% lower, so not the best of starts for PNB Housing Finance. What about stocks which are close to their 52-week highs? So there is some bit of pressure on Exide today after that big move, but otherwise it's doing. Others are doing reasonably okay for themselves. So that's the set of companies which have had some interesting moves today. IIFL has been bullish on JSL. They've given out a price target of 107. For now, a stock under slight bit of pressure. Agam, what are you spotting?
Jayaprakash Power Ventures continues to extend gains after the kind of strength that we saw yesterday. It's up another 7% right now. PC Jeweler also extending gains from yesterday, up 5%. So, and both of these were the top gainers yesterday in terms of the Nifty 500. They continue to take the pole position today as well. Bhushan Steel up as much as 5%, and Bombay Rayon also not too far behind, up as much as 5%. Himadri Specialty Chemicals had lost out quite substantially yesterday, and it is recovering its losses today, up as much as another 4%. And Lakshmi Machine Works is the other stock which is advancing by as much as 2.8%. On the losing end, and we have quite a few, I would want to mark Motherson Sumi out, considering we've had a brokerage note, turning bearish on this particular counter. On that account, we're looking at a decline of around 1.3% for now. Not too much to speak for. Vinati Organics now down 2% as well at around 882, and Inox Wind also taking a little bit of a hit, down by as much as a little less than 2%. But from the list that I've brought to you, it's very evident that the momentum is clearly with the gainers for now, and there are eventually more gainers also in comparison to losers, so the advanced decline ratio also looking up for now. Neeraj.
Interesting. Shrikant, final thoughts on open. The Nifty is cooled off completely. The Nifty Bank still about 0.5%. Anything that pops up on your screen, your opening thoughts?
Neeraj, I'm seeing this correction to continue, but it is going to remain in a range. So as we discussed, it opened around 750, now it is correcting. 670, 690 is going to act as a very good support. So it is going to spend some time. That's the view. And if there is again any bounce back, we should look for creating some short positions. But if I really want to trade along with the trend of the market, then we should look for creating short positions on McDowell's, which is currently around 3460, 3470. We are expecting 3400 to 3390 on the downside. And here we can keep a stop loss close to 3500 levels. So it's an intraday short call on McDowell's, United Spirits.
Okay, great.
Hadrien, what are you picking up right now?
Okay, Shrikant, we'll just thank you on that. I think we just lost the line of Hadrien Mendonca. Do we still have Mayuresh Joshi? In which case, we'll take in a final thought from Mayuresh Joshi as well. Mayuresh, as we kickstart trade, and the final thought from you, anything that you guys have recently looked at in terms of numbers and thought of getting in your portfolio management services scheme or advise your clients into buying any particular stock?
Not specifically for the PMS part, but music broadcast is something where our belief is that the next few quarters should be exponentially better. What they've probably done over the last 4 years in comparison to any NIL in terms of top line growth of 14% in terms of EBITDA and bottom line growth in excess of 35%, that can very well continue. The other element in terms of the capex done for 39 odd stations that they probably acquired, I think the capex is behind them, and again in terms of a very rich balance sheet that they possess and the maintenance capex of 5 to 10 crores expected every year, I think the fixed element of their operating costs are largely going to get covered, which means that the operating cash flows are going to be far better over the next few quarters. And again, ad revenue growth, the yields from that portion coming through, along with a lot of political events that are happening, will ensure that the revenue sustenance also probably compounds on that front. So we're all expecting a good chunk of dividend payouts to start happening over the next few quarters as well. And from a valuation perspective, looks reasonably priced. So I think in a staggered way on declines, music broadcast is something that we'll prefer.
Okay. We'll leave it at that, Mayuresh. Many thanks for joining in today and giving us that perspective. That's a view from Mayuresh Joshi of Angel Broking. Well, let's get in our next guest, special one, Pashupati Advani, founder at Global Foray, joins us right now on the show. Hi, Pashupati, thanks so much for joining in.
Thank you.
Is it a joint venture that you have with the JP Group? Whenever you're coming, they come out with some announcements that lead some frenzy in the stocks? No, but that just a
I
kidding.
wish, I should say.
You wish.
I'd be a lot richer or poorer.
Well, I don't know how much richer can you get, Pashupati. But nevertheless, having said that, what's the view? We've had a fairly decent move post those dips at 9900, 10,000 odd levels, currently at 10,700, 750 odd, whatever levels you want to choose. Looking at the earnings so far, looking at the high frequency indicators, what are you doing?
Well, I think the markets seem to be a little bit on the sort of frothy side at the moment, because I think there are still a lot of uncertainties. We are obviously affected by the high price of oil, and it looks like Donald Trump is supposed to make some announcement in our night today, their afternoon in Washington, which will have some effect. It seems that because oil is off about 1% off the top, that perhaps it's going to be a little softer, or at least it's going to be a delay, because he's got a lot of internal problems as well. So he's trying to dissuade the topic. But obviously, I would say the key driver for our market is the price of oil. And I think this move from 55 to 70 definitely has hurt our economy, and we are seeing it because the dollar is also, the rupee is also weaker against the dollar, and these are not good things for us to be able to digest. The other thing is, of course, that with oil prices going up, the burden is supposed to get shared between the producer, the refiner, and the government. But so far, the government hasn't given any money back. So we're continuing to pay higher prices at the pumps, which is, I guess, an ouch for the consumer.
Unchanged.
Yeah.
Right.
For 15 days.
Mr. Advani, you say that oil could be a concern right now. In that case, what would you do in markets based on your expectations of oil? Should we see it move to the levels of around $80 a barrel?
Well, I sincerely hope not. I think that would be a real pain point for us. I actually am not as pessimistic. I think that it looks like that 70 is where it looks like it's going to sit for a while. If he allows the Iranian oil, we are still beneficiaries in the sense that we are buying Iranian oil, despite any kind of sanctions that the US wants to put on it. We've, I believe, been reasonably firm and said that we are going to continue to buy Iranian oil, and we're getting it at a discount even now. as a country. But I think that it will definitely push prices up. So if 80 means we are buying Iranian oil at 70 or 75, it's still a lot more than 55. And I think that's where we need to look. The other thing is that, I'm actually looking at the FI numbers and I'm a little bit disappointed because they really haven't made any much of a driver this year. I think we're negative for the month, not a lot, and even we're less than $1 billion of inflows this year, which is a tip of the iceberg compared to normal years where it's 20 to 25 billion.
But domestics are sufficing for that?
No, domestics are taking the slack. There's no question about that. And the SIP and the saver culture is definitely making a difference. But the reality is that, in the global map, we need to be accepted and we are capital starved. So we need more money to come in. Sure. And, traditionally we've had 25, 30 billion, which has been matched by our IPOs. And then the domestics have kind of pushed the markets up. This year the IPOs are certainly more than $1 billion. I mean, a lot more than $1 billion. And so the domestics are, coming in. But the reality of the matter is that, we do need to get that push from foreign investors, which hasn't actually happened this year.
Mr. Advani, the question we often get is that are we likely to see these markets move sideways for the time being over the next 3 to 6 months based on, earnings still not up to the mark and among many other economic factors that one can consider?
Well, apart from, earnings, as you said, are probably going to be indifferent. I think, companies have had a lot of sort of setbacks, but a lot of the larger companies are getting to deal with it, and, the GST looks like it's getting smoother, the collections look like they're moving up. So, it's taking time, but things are looking in the right direction. So, we have decent macros and, long term it looks decent, short term we're going through pains. The challenge that we're having is that there is some political uncertainty. I think what's worrying people right now, the short term, obviously the Karnataka elections, but then, in the one breath people say that BJP is going to win in Karnataka, and the second breath they said whoever owns Karnataka has never won in the center. Right. So you've got both sides it's a double-edged sword for all the parties. So, it'll be interesting to see. It looks like, from what I read, the BJP looks like it's stronger in the coast and weak in Bangalore, and it's now only the in-between that is going to decide whether Karnataka ends up with the BJP or with the Congress. And I guess that's going to happen in the next 2 or 3 weeks. So, before this expiry of this future.
No, in about 8 days, actually. Yeah. So let's wait. Next Tuesday, we'll have the verdict. This time around, we'll have the first inklings of the verdict. What did you make of the banking names and the numbers, Pashupati? ICICI Bank posts its numbers. Actually, pre-numbers 3%, post-numbers as we speak, 6% rally. Axis Bank really went up post its numbers. Yes Bank, not a bad quarter again, 10% higher. These corporate-facing banks, the market seems to be liking them now.
See, the thing is that, I personally feel that they are all... we don't know the real truth. However, they have given better than expected results, and as a result of which they've jumped. And ICICI has definitely been driven by the ADR, which is up 4.5% or 4.25% last night.
But so, the ADR is also driven by earnings, right?
Yeah, but I'm saying that the pull has come from there, as opposed to the domestic markets having pushed it up, because yesterday there was no inkling of that in this market. I think that there is one school of people that feel that the banks have got hit very hard, and therefore it's a chance to bottom fish. And when you look at the market, are you looking at IT stocks look good because of the dollar, but then Cognizant has come out with bad results, so therefore that's down 5% in the US market. So we don't know. We're looking at alternatives as to what to buy, and there is always the contrarian view that is going to buy cheap stocks, and banks look like they've been hit. And there are some reports going around that say that,
What are you doing? I know the schools of thought. I want to know what Pashupati Advani is doing. Is he buying ICICI, yes, or an Axis?
I'm trying to stay out of trouble, and I think I'm on the wrong side of the private banks at the moment. Yeah. But, it happens. I think that, I just feel that all the news is not out. You've had results, they've made provisions. Who knows whether these provisions are right or wrong? And I think that, time will tell, but I think in long term they will sort out their matters and things will go back to normal. But we are still a long way from that in terms of time, and therefore there are opportunities in the interim to try and make money.
There are also concerns that it's really hard to find good ideas at good price at this point in time. For someone who wants to put in fresh investments, are there ideas out there?
See, I'll tell you, the sectors that seem to be reasonably comfortable, I would say, I still think even though it seems overvalued, the FMCG sector is still fine. Our demand is continuing to grow. I also feel that the other sectors that are interesting. Infrastructure is interesting because there are all the well-capitalized ones have got as much work as they want to get, and I think that their margins are actually going to improve according to me because they're going to be offered 50 projects instead of 5 projects, so they're going to have their choice. So I think in the medium term that those 2 sectors are fine. Pharma also, I think the worst is over. We went through a lot of pain where the Americans basically beat up on all our facilities, and Big Pharma at least has taken the plunge and has actually improved their facilities. And I think that has been a real positive for us. And we will not see it now because right now we're off the capex cycle and the capex is hurting. But really, if you look at it, the pharma sector is one of the only sectors that has actually done positive capex in the last couple of years. And so if you're looking at the medium trend, which is what you really need to do to make money, those are still sectors that you need to be in. And then of course, second-tier sectors like housing finance seems to be good because there's going to be affordable housing and there's going to be a lot more opportunities. The housing finance companies are not really showing too many NPAs because those who have kept to their business have done very well. And so I think that there are niches. I'm not so bullish on NBFCs. I think that they've got a lot of issues. I think they're going to have issues on the supply side of money. But I think that housing finance is still going to be a priority sector, so they will get money at a reasonable rate.
Speaking of housing finance companies, PNB Housing Finance is down 6.5% post the blocks. But I want to, before we ask the final question to Pashupati Advani, I want to tell you what Navneet Saluja did for you yesterday. She told you that PC Jewellers is likely to come out of the F&O ban. The stock is down 20%. If you had heard that piece of commentary yesterday at about 3:10 p.m. on Countdown on Bloomberg Quint, and if you're an active trader, big scope to make money there. PC Jewellers down about 14% as we speak. This is not to say that this is how the stock will close. I'm just pointing out that because it came out of the ban, it gave traders a chance to initiate some short positions, and I presume that that is what would have happened today. Pashupati, final question really. Don't worry, I want to ask you about PC Jewellers.
Why not?
Okay, be my guest.
No, I think PC Jewellers is an interesting stock in a bad place. The whole jewelry industry is under a lot of pressure. They seem to be doing okay, and the promoter came out, but the stock has seen what, 300 to less than to double digits and now back to the middle. So it's been a roller coaster ride, and a lot of blood has been sucked and lost in this battle. And I think this 14% dive is another shocker to some people who've come into the system.
No, sir, but what would you do? I mean, if you had the shares, let's say, what would you do?
No, I think that the time to have looked at PC Jewellers was probably to bottom fish around 100, 120. You didn't get much of a chance at this level. Maybe it's an opportunity to write both puts and calls, because I don't think it goes over 300, and I don't see it going to 100. So maybe to aggressively write some puts and calls and take some premium in and eat the volatility.
Interesting. Okay, Pashupati Advani, we'll leave it at that. Thank you so much for taking the time out and joining us and speaking to us on Indian Open on Bloomberg Quint.
Thank you very much.
Really appreciate the time. And viewers, we'll take a break. The markets flattish, the Nifty Bank doing very well. On the other side of the break, we speak to the PAR Secretary Ajay Kumar Bhalla about the lender's proposal for stressed assets and decode the earnings of Visakha Industries with the whole-time director and CFO V. Valinath.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Bloomberg Quint has tried to bring about a different approach to business news, economic news and equity market news over the last few months that we've launched. We are now adding a fourth large element to our coverage with the launch of Portfolio, a brand new personal finance offering with a very special bunch of guests to talk about how people can plan their financials and create a robust portfolio.
I need a return of around 10% just to deal with inflation. If over and above that, I have some modest goals around children's education, my own retirement savings and so on. It's very difficult to live in India without having a portfolio which is throwing off 15% with reasonable amount of regularity.
Choose stocks where the companies have a unique DNA to overcome evolutionary changes or disruptive changes, both inside as well as outside that company.
As the name suggests, Portfolio will try and address your portfolio queries. How should you allocate or asset allocate, and what should be the quantum within each of the sections to ensure that your portfolio easily enables you to meet the goals that you may have.
There are a bunch of interesting issues around the power sector, whether it's stressed power assets, the pace of rural electrification in the country, or just power demand and what it says about the economy. Joining us here on Bloomberg Quint to talk about all of that is Ajay Kumar Bhalla, Power Secretary in the Government of India. Mr. Bhalla, thank you so much for joining us here on Bloomberg Quint. Sir, I'm going to start with the issue which is top of mind here in Mumbai, at least within the banking circles, and that is the issue of stressed power assets. Sir, I believe, let me first ask you what you can tell us about the ongoing negotiations. We believe there are meetings which are scheduled to try and take this issue forward and find some sort of resolution, sir.
See, I mean, various efforts are being made to resolve stress of some of the power sector assets. One set of stress was due to cancellation of coal blocks, and those power projects which had the PPAs, they were allotted some coal linkage under auction policy called Shakti. So 5 to 6 plants have been given that kind of linkage. So they should be on the verge of sort of getting out of the stress now. And 1 or 2 other plants were there where some DISCOM related issues were there. Those have also been resolved. For the remaining projects, we had divided them into 2-3 buckets, that power plants which have PPAs and do not have coal but have some other stress issues like aggressive tariff, which they can't service the debt and all. So those are the assets which were under restructuring before the RBI circular came in. RBI circular of February also gives some flexibility to the bankers now, and SBI had told us that they are looking at finding out a resolution plan for some of these plants, especially the ones which are commissioned. At least 1 or 2 units are commissioned, and they can retrieve those plants. So SBI held a meeting of all the lenders in Mumbai, and they are working out on what could be the level of sustainable debt, what could be the rating of this, and then what are the other regulatory issues which Ministry of Power can resolve once the resolution plan is there. See, there are issues of change of ownership in the PPA, change of ownership in the fuel supply agreement if it exists, or availability of linkage, or change in some issues vis-a-vis regulators, the CRC or the SCRCs, which we are definitely looking at, and pass-through cost of the new emission norms and all. So all those issues which relate to regulatory side from Ministry of Power, we are working on that, and we would be able to resolve those issues. But let the lenders come out with a resolution plan that what could be the plan which is acceptable to the lenders.
So some of the issues that you mention are, sort of second level issues. I think the first point is, how do you come up with a structure? I believe bankers are suggesting some sort of an AMC structure where banks come, take equity in it, bring in outside participation, which then converts debt into equity in individual power plants, holds it together. So that's a very complex structure. It's been tried, I think, for the last 2 years, even at under the power ministry, but nothing has been actually worked out, right?
No, it was not tried in that sense, the way it is being put on the table now. In June last year, we discussed this issue under the chairmanship of Minister of Power at that point of time. And this idea was there that, okay, let some haircut be taken by the lenders, let the equity be converted of the promoters to least amount possible, and then put it in a SPV kind of thing. So this is what they are looking at. They are looking at funding from institutional finance type of institutions, and O&M to be done by companies like NTPC or other players in the market who can operate these assets. So here I would say the progress now is much better than what would have been earlier. And in any case, I mean, once lenders have to see whether this one also works out or not. It's a little complicated in the sense that power sector is at a different kind of problem. It's not purely a financial or a restructuring problem. Absolutely. It is complemented with the issues like coal availability, the PPA availability, the tariff on the PPA, and the DISCOM's delay in payments, which needs to be accounted for. So these are the other issues which need to be attended along with this. That's why SBI chairman has written to us and raised it with us, saying that if you can resolve some of the regulatory issues, this restructuring may be possible at this moment. So maybe if we work in a complementary manner, we may be able to bring some assets out of stress.
But sir, earlier the plan was to have a vehicle which was essentially going to be led by NTPC, maybe PFC, REC, which would take over the equity in these power plants. That did not work out, right? Was it reluctance on the part of NTPC, PFC, REC to do so?
No, not at all. I mean, it was always the lenders who had to come together to form a SPV or in whatever asset management company they wanted to house the assets. NTPC was never supposed to be part of this SPV or the joint venture company which was being talked about, because NTPC is going to operate some of these plants, as desired by the lenders or the SPV, proposed asset management company and all. So it was never like that. NTPC did a bidding on its own and some people showed interest, but even that has not come through. So I mean, if it has to be, the problem needs to be attacked from all the sides. And we expect that if SBI puts the pressure and all lenders come together, we definitely would like to see that some of these assets come out of the stress.
Would the government be willing to put in some equity into this AMC-like structure, so that is being considered? Would there be government participation?
I don't think the scheme envisaged by SBI is looking at that kind of equity support from the government. In any case, government doesn't put in equity in, the company it has to put in equity in its own PSUs and all. So, I don't think that is an issue, but some of the lenders are willing to put in and they are finding a financial institution to put in money and equity.
Okay. Sir, assuming it's, I guess too early to tell whether this plan will actually finally fructify or not. But this whole issue of stressed power assets is now stretched out for a very long time, sir. And I think as time passes, the debt burden only builds up because interest keeps building up. So the proportion of unviable projects is probably rising. At a government level, at an economy level, do you not think that the power sector issue has to be resolved now?
It has to be, as I said, it's a good beginning made by SBI. So we need to, coordinate with them and see whatever the regulatory issues in the system are there, if those can be resolved by us in a manner which is acceptable. So that is the point we are taking initiative. Even we have written to RBI also to request for some special dispensation for the power sector, which has not been agreed to because they don't look at the sectoral issues separately. and which Power Ministry needs to address. So we are working on it. As I said, I mean, if some resolution is available, definitely we are very much interested in resolving these assets. On our part, we have brought in one small pilot for buying 2,500 megawatt of power on bidding basis, where we have made the model a little different, so that the burden of fixed cost and all is not available. It's a very short, medium term, 3 years bidding. If that pilot there's demand and generators bid for it, we will continue with the pilot as a regular scheme to supply medium term power to the discoms.
So the RBI, sir, you said has not agreed to any forbearance on account of power sector assets alone?
Yeah, I mean, we had said that power sectoral issues may be seen little differently, on which RBI has said that, okay, I mean, they generally, as a regulator, bank regulator, they don't look at the sectoral issues. It's for the Ministry of Power to look at those issues which can be resolved.
Okay. But at a government level, I come back to that question. There's no question, for the want of a better word, there's no question of a government bailout to some of these power projects or government support in some ways, other than what you just mentioned, the power purchase scheme. But a larger, bigger sort of level of government support is not under consideration at all?
No, I mean, I don't say that the agencies which are working for resolving these assets are government agencies, whether be it the public sector banks or the companies like REC, PFC, which have funded some of the power sector projects. Or when it comes to operating these assets, then companies like NTPC can also come onto the scene. And from our side, the policy issues, the regulatory issues, the coal-related issues, government is making full efforts to resolve that.
We're going to catch that entire conversation at 10:30 a.m. today. You don't want to miss that. Okay, the next guest on the show is Visakha Industries. They have posted, I would say, a mixed fourth quarter. The revenue numbers look fairly flat, but they've clocked a 50% growth in bottom lines. The company's also started trial production of Atom, an integrated solar roofing system from the new facility in Telangana. So what will this new facility do? What will the year ahead look like? What are the growth drivers? Let's find out all of that from Mr. V. Vallinath. He's whole-time director and CFO at Visakha Industries, joins us on the show. Good having you, Mr. Vallinath. Thanks so much for joining in. When we spoke to you in February, you had told us about how the first 6 months you had grown about 5 to 6% in the building segment. While Q3 is a weak quarter, this year was very good for you. But as I look at Q4 numbers, and I'm focusing on the top line right now, the building products division once again has not managed to grow. Why is this the case, especially when your peers are doing something different? They are growing the building product segment.
See, at the outset, let me tell you that overall, I think we have grown about 2% in the building product, in the asbestos cement sheet segment. And in the board segment, we have grown 9%. In the overall board segment, and in the domestic market we have grown 14%. So exports play spoil sport in the boards division because of the Middle East market coming down, because the new players joining there. So if you look at the overall volume growth, I think we had a very higher base last year, and therefore the growth looks a little lesser. The second thing is also strategically that we were not pushing too much material because we also wanted to maintain margins. Going ahead, we have also, in fact, if you see, I think it's also reflected in the increase in the inventories in our case. We have built up inventories because the market is going to be good, the peak season is ahead, and therefore we were not willing to push too much volume in this quarter, because overall we have done very well. If you see and that is the overall strategy, I think, is reflected in the overall EBITDA margin and the overall PAT margin. The PAT has grown from 41 crores to close to 67 crores. And this year happens to be the highest PAT in the history of the company. The previous highest was 57 crores long time back. And after that, today, we have convincingly crossed that limit of 57 crores with a 67 crores PAT. And the outlook seems to be very, very good on the ground, both in terms of boards, in terms of the asbestos cement sheet business, and of course, we are talking about the building products, but even the yarn segment. So that's why how I would put the company in perspective. So you see slight differences in the volumes and the turnover, but that gets overall reflected ultimately how the margins have been managed, how the market share has been managed, and how we have grown from a higher base of last year. If you see the last year's profitability also, I think we have done very, very well. And on top of it, we have improved it significantly this year.
Okay. So, so let's break this down. You've consciously avoided pushing too much of stuff because you see a busy peak season ahead, and it serves a double purpose of improving your margins. Now, your margins have improved at about 13.7% versus 12% for the quarter. What do you think the average margin picture for FY19 would look like? And with the peak season around the corner, are we to assume that this export and domestic combined, the building products segment will show growth? And what kind of growth in FY19 as a year?
Yeah, FY19 as a year, I think the exports have bottomed out. There is a significant slide in the exports, especially if you take the fourth quarter. We have slided by 25% in the boards in the exports. So despite that, we have ended up flattish. So the domestic has actually grown significantly. So therefore, I think the next year with the new plant coming up in the north, we will be more ideally placed to reach the market in a short time, and even for smaller quantities and no need to move big truckloads of material. And we are looking at an upward of 20% growth, 20% plus growth definitely. A high double-digit growth in volumes in the boats, and maybe about a 5% increase in the volume in the asbestos cement sheet segment, and some amount of, at least we would like to protect the asbestos cement sheet margins, but I think this year the story would be growth. We would like to grow volume and while maintaining the margins. In the boards, there is a potential to grow the margins. In fact, the boards margins have been in single digits this year. We should get into a convincing double digit next year.
So would you take any price hikes for the same, or will it only be a volume-led growth?
Major is volume-led growth, but to some extent there will also be a price increase because some amount of increase in costs, whether it's in salaries and wages, which is the fixed cost, or some amount of increase in the raw material prices, etc. To offset that, I think we will take some amount of price increase. At least we hope to take the price increase as the product is becoming popular, and the price differential between us and the competing products is becoming increasingly clear to the market. I think we see an opportunity to increase prices moderately.
Fairly interesting. I believe, one part of this increase in cost will also be the increase in freight cost due to oil, if you can throw some light there, and the impact of the INR depreciation. Will it help exports meaningfully in FY19?
So INR exports, increase in depreciation to some extent can support exports. Well, there we would be looking at the opportunity in the spinning, but I think in the boards, as a matter of strategy for the last many years, we have been focusing on the domestic market. And that's the reason why today in the domestic market, we are the market leader. We are setting the highest tonnage in the domestic market, and we have created enough footprint and the infrastructure to grow the domestic market. All the other international markets, this product is very, very popular, and there are so many brands operating there. So in India, it's still yet to grow, and therefore this is an opportunity for a homegrown company to increase its footprint and establish itself as a major player should anyone else eye this sector. So the growth would be more towards domestic focus.
Okay, domestic focus growth, but exports have bottomed out as well. In light of all of this, cost pressures, price hikes, volume growth, I heard you mention that you will look to maintain the margins. What would the levels be? You would have, I think you're at 13.7 on a YOY basis. They've gone up on a sequential basis. They've come off a little as well. What's the ideal band of operating profit margins or EBITDA margins that you would look to maintain for the year as a whole in FY19?
See, we are also eyeing a significant increase in the volumes in both the asbestos cement sheet, the boards and panels division, as well as the yarns business. And therefore, overall, I think even if we maintain the EBITDA at a current level, maybe we would like to improve upon it, but let's see. But I think ultimately the game is about optimization and looking at the opportunity. In the long run, if we grow volumes, I think we will be maintaining a sustainable base and an opportunity and create awareness of the product in a significant manner. So margins will definitely be in our mind, But I think that the current level, the margins are good. There is some amount of an upside potential possible. I don't see much in the asbestos cement sheet business in terms of the upside potential in the EBITDA margins, which perhaps anyone else has recorded in this industry. If something happens, it's good for us. But I think in the boards, yes, there is some possibility. And in the yarn business, there is some amount of possibility. So overall, if margins were to moderate slightly by 1% or 1.5% in the asbestos cement sheet, overall company as a whole, with the help of boards and yarn, if we maintain the same EBITDA and grow the volume significantly, 5% in asbestos, maybe good double digit in the boards and a good double digit in the yarn, I think overall, I think we should be looking at the PAT and the cash flow that is going to be generated in the business.
So
I think that's the way I think we look at it.
So blended margins between 13.5% to 14% for the year?
Yeah, comfortably, very comfortable.
Better than that?
Yeah, should be better than that. I think the hope is, yeah.
Okay, fair call. What about the bottom line numbers then? Because you yourself mentioned that you've comfortably passed what was the previous high by a significant margin. I think 57 to 67 is about 18% beat on the previous year at least. Do you expect an 18 to 20% bottom line growth looking at all the growth factors and the margin picture in FY19 or FY18?
See, first of all, let me correct, because it is not increased from 57 to 67 over last year. 57 is the highest we have recorded earlier. Yeah. Over last year, the growth has been more than 25%.
Sure.
Almost close to 50%. Hello?
Yeah, I can hear you. So let's assume from the base that you are at currently, would you expect a 20-25% growth in bottom line for FY19 over FY18?
Let's see. I think definitely there's going to be improvement. A significant improvement should be possible. But let's see how the factors play out. See, with the new project coming in the initial quarters, we'll have the higher operating expenses that will come in from the new projects, both the projects, the boards project and the atom project. So across quarter, there could be some amount of this thing, but I think overall, I think the PAT should be much higher than the previous year.
Okay, I have about 60 seconds left, Mr. Valinath. Quick thoughts on revenue visibility for the boards projects and the atom project, very quickly, please. For year one, FY19, let's say.
The boards project, I think the boards business, we should grow about 20%. The atom project should take off well. I think we should clock at least, we should get initial revenues of at least 20-25 crores to start with. The potential would be at peak capacity at 75 crore at the current installed capacity. So even if we get about 25 crores and establish the product as a real innovative product, likable product, I think the job is done.
Okay, 5 years CAGR, 20% revenue possible? Do you have that visibility for the blended business revenues?
See, as this is a cement sheet, I can only look at the next 2 to 3 years. I can talk about the visibility, maybe 5% CAGR. But in the boards CAGR, 20% CAGR is possible. In the yarn business, again, there could be 15% in the next 2 years, and after that, it will be flattening out because we don't plan to expand anything more. Because on the other thing, I also want to mention that the future capex will always go for the new age building products, no more into cement, asbestos, or even the yarn business. So it will be expanding atom, it will be expanding boards and panels, and maybe any other products which are likable and which will be future oriented.
Okay, we wish you all the best for this and more. Thank you so much for taking the time out and speaking to us. We look forward to talking to you at the end of Q1 to figure out the progress there and how has the uptick in the export market and the focus on the domestic market shaped up for you as well. Thanks so much for taking the time out today.
Thank you for the call, and I hope that next time when we meet, we will be in much more comfortable position in the growth trajectory which we are discussing today. Thank you.
Cross fingers for that. Thanks so much, Mr. Valinath. Okay, that's Visakha Industries sounding fairly upbeat and confident about FY19. The market's not looking so upbeat though. Just about 11 points for the Nifty, about 77 for the Sensex, but the Nifty Bank is holding fort, and that is good news from a bull's perspective. It's a wrap on this leg of Indian Open. Up next is the FNO show. Stay tuned.